Talking about growth capital and providing advice, finance, branding, you name it, to growth companies, we had to go to the US to find the best in class who has done probably the most attractive or the best deals in Europe. And now it comes, something we share without having an office in Europe.
No office, a lot of travel.
Yeah. And I know you guys are traveling a lot, but tell us, why do you think, first of all, you have done so well in Europe? And maybe this is a time really where you can brag and name a few of your deals. And most of the deals are so well known that the audience are familiar with those brand names.
Well, I mean, first, before I talk about the deals, I'll talk about why we're focused on Europe and why I think we've had good success in Europe. And I think it's because our overall firm is focused. So the entire firm just invests in software and internet companies on a global basis. And the result of that is our ability to evaluate deals, no matter where they are in any geography, is really good. All the partners understand all the business models that we invest in. And so their ability to move quickly, sometimes faster than firms that might have multiple verticals that they're focused on. So I think that's really allowed us to, one, select well, and also win some of these deals because of our ability to move quickly. I'm sorry?
It's focus.
It's focus. And I think that if we were trying to buy a manufacturing company, my guess is we wouldn't win. We don't have any edge. We don't have the ability to evaluate that quickly. We don't have a network.
How big is your fund?
So the current fund is $3 billion. Fund 8 is a $3 billion fund. We have about $8 billion of total assets under management right now. So we'll invest. A small investment for us is about $20 million, and we'll scale up to $250 to $300 million in a single transaction. But in terms of, some of the deals, we've been very active globally. In the last 18 months, we've invested over $2 billion on a global basis. In Europe, some of our more successful exits have been Trivago is one that a lot of people would know here. TeamViewer is more of a software business. But that's one that we invested in. It was a German company that we recently exited. It had merged with another one of our portfolio companies called GFI. Daily Deal.
By the way, both were $1 billion exits.
Both were north of billion-dollar exits, yeah. And they were both were very profitable companies when we exited as well. And then on the other side, just in terms of the last 18 months, we've also been pretty active in terms of making new investments as well. HelloFresh, Dawanda, we've continued to invest in. That company we invested in prior to 18 months. Vinted, which is a marketplace, apparel marketplace business. Car Trawler in Dublin, which is in the car rental business.
This you did, I think, together with BC Partners. So
BC
you
Partners.
Also co-invest.
Yeah, so we will co-invest, but I think the more important distinction is we'll do everything from a minority investment all the way to a majority investment. In the case of Car Trawler, it's more of a majority investment. We're about to do, we're about to close a deal next week in the classified space in Europe. Can't announce it yet, but we'll announce it hopefully soon. So I think we continue to look. My team has me booked back-to-back at NOAH, so we're looking at a lot of things here as well. So it's so I think for us, we see a lot of opportunity. The good thing, if I look at Europe today versus 10 years ago, the challenge that we had was that in terms of the human capital, in terms of the management teams, there's been such enormous progress right now. And I was just on this panel and seeing some of these people present. It didn't matter whether they're presenting from India or Poland or wherever it is in the world. That kind of entrepreneurial spirit, we see it everywhere. We see fantastic entrepreneurs everywhere, and that really creates huge opportunity. But if you look at the U.S. market, a lot more capital relative to the number of deals. Yep. Europe, other places that we're also investing, Latin America, Asia, there's a lot less capital relative to the opportunity, which for us is good.
So are you going to open an office in Europe anytime soon?
I think it's unlikely that we're going to open up an office. We're here like we have an office. Last week we had a team here. This week we have a team here. Next week we have a team here. They're not always in London.
So maybe you get a subscription on Airbnb or so.
Yeah. No, I think that for us, I think in any given year, Europe could represent 25, 30% of our deals, or it could represent 10 or 15% of our deals, or it could represent more. One of the advantages for us not having offices is when we talk about deals, we truly are looking at each deal on its own merits. There's nobody who's the India partner or the Latin America partner or the Europe partner who's trying to justify a deal because they need to get deals done. Everybody comes in to pitch the best deals on a global basis. And that creates a certain discipline. You're not measured on deploying capital in a country. You're measured on deploying capital that has successful returns. And one of the challenges I sometimes see when we're in these markets is, deals are getting done because people have to do deals. And that's always a bad reason.
So you recently have a big shift or an extension from pure internet models. You're getting very excited about software.
Yep.
Is that valuation driven?
No, I think that one of the things that we've seen, if you look within internet, there's lots of different models. E-commerce would be one example of something that we have a lot of historical investments in, but frankly, what we found is that the competitive landscape, the capital intensity of the model, the capital intensity relative to return is not necessarily a great bet. Ad tech's been another category where it's been very challenged from an exit standpoint. I think that what we see in software is that in this shift from what used to be 10 years ago primarily enterprise license companies to today SaaS businesses, the business models have improved dramatically, right? And you have much, much higher levels of recurring revenue. And I think that you have a seismic shift happening in the enterprise from historical models to next generation models. And so the market size is growing very, very quickly, just like the internet market size was growing. In a lot of categories in the internet, the categories have gotten mature.
So you care a lot about predictability, which is more given in business models where you have like
but there are business models. We're investors in Shutterstock, and it has while it's not a subscription software business, it has highly predictable revenue, but they sell to a lot of enterprises, actually. They sell to a lot of ad agencies. They sell to a lot of businesses who are changing their buying pattern. So it's not that internet businesses can't have that, but the vast majority of them actually don't have that. And I think one of the things that we like about marketplace businesses is, like good software businesses, they can be highly capital efficient.
Let me ask one last question. What is the biggest mistake or the mistake you see repetitively when people are contacting you for investments?
Well, it's a couple of things. I'd separate contacting from actually showing up in a meeting, right? So there's two different mistakes. I think in our firm, some of you have probably gotten cold called by our analysts and our associates. And I think the biggest mistake, I hate to say it, but that people make when we're contacting them, they assume that because they're getting contacted by an analyst or an associate, that person's not important. And at Insight, that person is very important. And in many, many cases, if that person is not excited about the deal, it's probably not going to get done. We've kind of taken the venture model and put it on the head, kind of turned it on its head, where my network is not what's driving our deal flow. 70% of our deal flow is driven by our analysts and our associates who are out there talking to companies in this space, who are super knowledgeable. And I think people mistake the title for their importance. And so coming into Insight, people always say, oh, if I'm not talking to a partner, I'm not going to take the meeting. And I think probably we miss deals because of that, because I can't meet, or the partners can't meet every company that wants a meeting. So that's...
But you know what's the trick? When I worked at Lehman, I always was introduced as the head of this and the head of that. It just started. So some people don't care about titles. Just put everyone partner on the business card.
Right. I think Sequoia, I've now met like 28 people at Sequoia who are partners. So I think they've kind of reduced to that. I think when people actually come in and we get to a meeting, it's going to sound like motherhood and apple pie, but it's still amazing to me what percentage of people come in not prepared. And the question that I'm most often surprised by is when I say, who's your competition? And somebody says, I don't have any competition. Because generally I want to end the meeting right there. If your market is not interesting enough to have competition, it's probably not going to be interesting to me either.
That's very interesting. Do you think European internet companies are less expensive than their American counterparts?
I think that was probably more true a few years ago than it is today. I think if I look at the deals...
Good stuff is expensive, no?
I'm sorry, good stuff's expensive globally, right?
Yeah.
If you want to have the #1 player in e-commerce in India, it's not going to be inexpensive. You can see the valuations that flip. When we did JD in China, it was expensive. When we bought Alibaba shares, they were expensive. The good news is they've all gotten a lot more expensive. So quality is always expensive. In the internet space, in the technology space, you don't generally win by getting value. I mean, the analogy, I like to use a real estate analogy. We tend to focus on oceanfront real estate. Sometimes when you own oceanfront real estate, someone comes in and pays you a lot of money for it. You can get a great value in the hurricane zone. You don't tend to get lucky on selling it.
Okay. Well, thank you very much for being with us, Deven.
Thank you, Marco.
And looking forward.
And congratulations and happy birthday.
Thank you.
Okay.